Hello and welcome to the Fibonacci free video for Friday, September 8th. This is David, and let's start digging in. I want to talk about futures rollover, which we're going to see come into play here next week. And the reason is we look at a chart of the E-mini S&P futures. Look, the current front month contract, which is printed here on my chart, is the September contract. This expires in September, the third Friday in September, which is next Friday, and it will stop trading at the cash open next Friday. And at that point, the earliest to expire contract, which will be trading, is the December contract. That will become the active front month contract, and most charting platforms will switch over and start charting that December contract on Monday. The reason that's important is that at current interest rate levels, the December contract has about a 50-point premium to the September contract. So as I'm talking right now, the September contract is trading around 44.65, and that means that the December contract is probably somewhere near 45.15 right now, trading up near here and nowhere near on the chart here. Right. And so the reason this is important, let's say that you want to use some Fibonacci retracements. Let's say that you want to look at this move down from last Friday into this Thursday's low, and note that the bounce into today's high turned down from the 38.2% retrace. Well, that's important, but what if this bounce keeps going? What if it works its way up to 61.8 and only then turns back down? That might happen later next week, and your charts are already rolled to the December contract. Well, that December contract, when the September contract is right here, that December contract is going to be up near here, actually above last week's high. So the point is, you can't use levels like this here next week. Now, there are a few options if you want to keep using these levels in the future, right? So one possibility is you can just start charting the September or the December futures, right? So and what you'll want to do is not use, let's see if I expand this to show you the symbol, right? I use this ES pound symbol, which is going to show me an adjusted chart, and some of these levels are still going to be related to September. But if I come in and put in the specific code for those December futures, ESZ23, then what I'll have is a level up here I can use that was still made back here last Friday because the December futures were trading, and I can then also use this level here, right, which again, even though the active contract was here in September when yesterday's low was made, the December contract was still trading, and you can see we still came to the 38.2% retrace. So that is one solution just for pure Fibonacci, right? And that'll work pretty well. But if we go back to that the chart we were on previously, hold on just a second, it'll highlight a different issue, right? So if we just look to give me just a second to fight with this platform. Right. If we come back here, we'll also see these Voodoo Lines levels, right? The Voodoo Lines, which found the high back here last Friday, right? Found the low here last Thursday, found the high of today's bounce, right? These levels are fixed, and whatever ES contract we look at are going to be here. So while you can use that tip of moving all your fibs over to the December contract, if you want to use the Voodoo lines, my recommendation is this: through next week, plot the outgoing contract. That's the contract that we know is continuing to behave very well with these Voodoo lines. And so I want to keep using it with the set that I know is working well. And then when we roll over to the December contract next Friday, and you can't plot the September anymore because it's no longer moving, and you have to watch the December contract, give it at least a few days of trade to make sure that price is continuing to observe those Voodoo lines levels. In my experience, it almost always does. I've been looking at this for well more than a decade, right? And this 45.38 level up here has been at the same spot back when we were trading the June contract and the March contract and the 2022 contracts. And it's been an important spot in all of those. So look, I just always want it to prove itself to me. And then the other alternative is to come in and just use the cash S&P levels with your Voodoo lines and use those for a little bit, because there is no rollover in the cash market and you can always rely on those levels. So those are my tips for using Fib and Voodoo line levels starting next week when we do roll over into the September contract, or the December contract rather. I hope you found it useful, and I will see you at the next update. Hey, David here with Simpler Trading. Thanks for taking a few minutes to watch this video. I hope you found it useful. And if you did, please help us out. Click the like button. You can also add your comments below. We love to read those and respond to them. You can also click the bell icon. That will alert you whenever we have new and updated videos. And if you want to watch us trade in real time with our own money, you can visit simplertrading.com to learn how to sign up. Until I see you again, as always, good trading, and we'll see you at the next video.